All right, folks, welcome to the market recap. Today, we were looking for longs. We did have a setup, but that setup did not follow our rules. It followed everything except the number one correct rule, which unfortunately it did not follow that rule. So we did not proceed to take. And other topic is this market manipulation that every time it occurs. Same thing happened over here. How did you know to buy around here and avoid buying here, 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 this number one, and all of this, and buying the correct one and not getting stopped out? How did you know to buy that? Is by simply looking at this specific example. What everyone thinks, basically a dumb money, what people imagine it to be. And this barely occurs. It barely occurs. Has a 5% chance of occurring. And this occurs during a very beautiful price action. And this does not look like to be one. This is how it always works. Market goes up, touches the A point with this candle, people short it down, they get stopped out, then eventually this one they want to go to the point. And this is a perfect example right over here. People long this up. Let's not even worry about these specific lows, because dumb money, if you believe it or not, buy these lows up, they buy it up, they get stopped out. Let's not worry about that. Let's worry about specifically about ranges. Range low, right over here. Range high. Range low gets souped. People get number one. They enter. Oh, they're making money. He stopped out. Boom. And eventually, we get another model one, and this one was the one to perform. So taps it, just like this. Goes right back down, goes right back up, then goes lower. But how do you know that this will not happen sometimes? How do you know? You would just go soup it, right? Soup out the low, give you the model one, and just rally. How do you know which way is it going to be? By looking at the low. This low right over here is not a legit low. So market soups it out. Now market needs to form a legit low, which is this low right over here, and it needs to soup out this low. Then rally. So we have a not legit low, purge it out. We form legit low. Now we're looking for legit low to get formed, to get purged. Then we're looking for our entry model. Because if you long this up, you get stopped out. Then market gives you the entry you want. Then it goes up to your direction. It's all about prediction. And you can see this is how you know that the market will highlight you do this or this. How do you know we can do this one more time? It's simply by looking at the lows and the highs. How do you know we can do this? By looking at the lows and the highs. The low has just a bearish bullish candle, a legit low. Market is highly likely going to do this, but if it doesn't have a legit low, you'll mess around and do this and go up in your direction. This is what every time it happens. Every time it does this specific type of movement is either this one or this one, but you gotta know. I just told you guys the answer. If you paid attention, this is what happened. This is how you know. Well, this will happen or this will happen. And keep in mind, this does happen. This does happen, and this does happen as well. I showed you guys yesterday. Yesterday, just push down, tap it, number one goes up higher, right? Without tapping it again multiple times before going up higher, right? And keep in mind, with the picture I just showed you guys, you must implement time being the most important factor. Now let's get into our market recap. I was looking to long up this rejection block. You know, it looked very beautiful to me, right? Eventually I was like, man, I'm gonna long it up. But I saw the candle closure. I was like, yo, this looks beautiful. This looks like to be the one to push it up. And the number one, yeah, as you can see right over here, unfortunately, this was the candle to do the number one. It did a same price closure, which I can't accept. As you guys know, clarity is key in trading. And if you're looking for an auto block or breakout structure, you usually want it to close above or below, never the same price. In this case, the same price. So we couldn't take it. This gave me unclarity if I'm looking for a body or if I'm looking for a full candle closure, right? Because I do not want to make the same mistake of having the wrong number one. And I knew it was going to deliver, but I was like, we have to have precision, because I checked over my setups that occurs during the week and it's only 1 or 2 or possibly very rare cases 3 trades. And I knew I usually get 1 or 2. Probably wondering, well, yesterday I had a setup to the downside, you went to a loss. But our actual setup should be right over here. But we learned from it. You can see yesterday we were short. I was like, okay, I did my bias wrong. I was meant to be bullish. Eventually, we became bullish on that the next day today. But eventually now it performed very well. Right now you can see the pattern worked out in our favor. But yesterday, I'm wondering, well, if your setup occurs once or twice a week, rarely, and probably not even a week, and didn't this setup already happen? But this setup right over here was not our setup, because this setup was a pattern that we took, which didn't have no logic, didn't have the correct draw on liquidity. This one right over here was the threshold entry to the long upside with a 6 a.m. to 7 a.m. CRT. Long that shit up. That was the actual setup. And I know my setup don't occur the same couple of days. They can occur the next day, but I know that I have to be very positioned, because I don't see my setup occurring every single week. I only see it occurring once or twice. And I know I get setups on NFP days. So I was like, yeah, I know my setup occurs on NFP days, so I'll probably wait till NFP. Because I know my setups occur very, very low. They occur in slow numbers. What I mean by that, they don't occur too much. They occur only once or twice, or rarely 3 times, or usually once or twice, and usually most of the time 1. I was like, okay, I gotta be very positioned. I'm trying to change. You guys, as I said, you guys are gonna see a huge difference in performance in my trading, which is occurring right now. But enough of that yapping. Let's get straight into it. And so the reason why I didn't take the trade was simply because of the wrong number one. I can't have the same candle closure. I need to have a candle closure above it or below it. I cannot have the same price closure. I don't do that. Clarity. You want to wait for the highest probability. The highest probability will close above it or below it without doing anything else. Right? And you can see resistance block perform very well. I mean, if you trade resistance block here, the wick is so big. So if you trade resistance block, since the wick is so big, you're gonna enter on the resistance block itself, but you're gonna put your stop loss at the 50%. If you put your stop loss at the 50%, you would have been stopped out. So you put your stop loss at the wick, at the extreme side of the end of the wick, where there's a high or low, or whether there's something there that could protect it potentially, like being the slope that could protect it. So since if you put a stop loss all down here, you're too much. That's too much wide of a stop loss, and the wick is so big. Market is not gonna go all the way down there to fill the wick. So it's probably gonna fill the 50% mark of usually when the wick is big. You don't want to enter the 50% mark. You want to enter at the start of the resistance block, but market will sometimes it will happen. So if it says sometimes market could go to the 50% mark, like in this case it did, you would want to put it beyond the 50% mark, a little bit above it or below it, just to cover that potential 50% mark tap. So you put it below this low, that could have been protected, and it's a very pretty wide of a entry. So putting a stop loss there would make sense. And you're going for a 5 RR, as you guys know, for a resistance block, we head for a 5 RR take profit. I have RR over here, and you got met. You can see, as you guys know, for the Model 1 itself, we go for a 3 RR, fixed RR for a threshold, 4 RR for a resistance block, 5 RR. But why not going 3 RR on all of them? It's because order block is, the Model 1 itself is this big of a stop loss. Resistance block is this big, and the resistance block is this big and the threshold is kind of wider. So that can give us a little more tight stop loss, which means we can have a little more RR. So the table can be a little closer. So we can go for a little RR, right? A little bit more RR. So 3 RR for number 1, 4 RR for threshold, and 5 RR for the magician block. Now, let me give you a top-down analysis to what I was looking for along here, and let's get straight into it here. We had we go to the higher time frame. We had a weekly shift to downside. We had another weekly shift to downside, weekly premium arrow discount IRL. We had another weekly shift to downside, but that's the weekly. There's a long term. I learned from my yesterday lesson. On a daily, we had a daily series to the upside, a daily IRL. But I wonder, well, it doesn't make sense. Why didn't you pick this other IRLs? And why did you pick this specific IRL here? Why not these ones? Because IRL to IRL doesn't matter. For the IRL, you have to look back. So if you're confused about the IRL to IRL, it won't always be. A lot of you guys imagine IRL to IRL to be something like this. It doesn't work like that. If that does happen, even a baby could make money from doing this, right? If that happens, everybody's gonna make money. So market needs to manipulate somewhat and get some new orders there, because if it does that, it's gonna be too easy for people to make money. So it doesn't work like that, right? That's why people who trade IRL to IRL are still unfucking profitable or still fucking losing money, right? So you need to look at the sides, look at the back. All right, we have an IRL here that could potentially outperform. At first, during this day, I was bearish because the daily time frame was telling me more bearish. But I looked at the back. I was like, oh, there's a daily fair value gap there supporting this, because we had a daily SMT ERL to IRL, which already got met. They went from daily IRL back to ERL. That's actually why I was looking for a long here. Daily IRL to ERL, a daily series to the upside, a classic expansion profile to the upside, profile 1 to the upside Monday, low of the week. And as well, we had a, what else do we had here? That was literally it in a higher time frame. The lower time frame, we had a lower time frame daily range, super low, super high, stable low, stable high, premium discount. We're in a discount of the daily range, so we want to go to the daily range high. We also had a range low, range high, our range low, so range high, as well as we had a near continuation. We had an OTE with the London session, as you guys know. If the A session or the London session swoops out of CRT, there will be OTE. Keep that in mind. And the OTE does not have SMTs. The SMT does not work on OTEs. What else do we had here? We had a false market shift to the downside with the explosive price move to the upside. We had another false market shift to the downside with a explosive price movement to the upside. As well, we had a false breaker, and eventually that caused a expansion, explosive price movement to the upside. As I told you guys in the live stream, what did I state in the live stream? I said that this break, I want to see explosive price move to the upside, because there was a false market shift to the downside slash breaker. That means there should be explosive price move to the upside. Guess what the market did? Explosive price move to the upside. This is why you guys gotta learn at the patterns, not the pattern, logical patterns. This is why you gotta study the market, and and you would know your answer, right? And I've already made a video about the false market shift to the downside and all of that. So you can just go check my videos on those specific topics. Now going to lower time frame, we had an OTE right over here. This is our 21 o'clock low. It eventually slipped it out. We had a low, high, lower low, higher high. This is the highest high that you made before the OTE. This is the highest high that you made. Eventually, I'm looking for a deep retracement to the 0.50% mark, the 0.86 mark. Eventually, market did the deep OTE. Now, all we're looking for is going to lower time frame. I was looking for a outlook to the upside. Right, outlook CRT was first this candle. Then eventually, the CRT I got made. That means we're no longer in a range no more. And eventually, my range was this candle doing a double purge. So at first, our range was this 6 a.m. candle. 6 a.m. candle low gas soup, and eventually market with 6 a.m. high. I was like, okay, we have no range. I have to look for a new range. Our new range was the 7 a.m. candle, 7 a.m. candle low, 7 a.m. candle high. People wonder with the 7 a.m. candle high got pressed first, but guess what? There could be what? There could be a double purge. Market purge at the high, eventually purge at the low, then eventually did an explosive price move to the upside right over here. You can see to the drawn liquidity, which is a fixed 5 RR. And eventually it's performed very well. You can see resistance block entry. Unfortunately, the only reason I didn't take it was because of the wrong model number one. And the next lesson is, so the lesson of this day is specifically, actually, the whole lesson of this day to be precise. Don't FOMO, because every day is a new opportunity. Every setup is like a bus. If I miss one or miscalculate, or if the setup did not follow my rule, like this setup, I simply wait for the next setup. Zero FOMOs, zero feelings, zero fuck givings, zero everything. It's only business, right? And now, the next thing I want to talk about is trade. I used to his phone here. I was looking for the Model 1. Although I'm gay, I looked for the Model 1 here. What I fucking did wrong was I fucking used my phone. My phone / my computer. I can't fucking use the computer or the fucking phone when I'm trading. I've already talked about this shit before. This shit will not fucking happen again. Although I knew, I saw the market, this, that, but I'm fucking trading. So I need to fucking focus, and I don't give a shit about anything else but trading, because I'm fucking trading right over here, right? And during this time, I was fucking not too conscious here, because I was looking at a tweet of Elon Musk. The fucker was talking about some shit about Trump and shit. I was looking at the fucking chart. It can't work like that, right? This is the fucking most important part of my fucking day, right? This, praying, and everything else, other business as well. But this is right over here. It's very long-term fucking business, which this is how I fucking make my money. So if I don't do this shit, I ain't getting paid. And I do have other side of income, but I don't really need this at the moment that much. But this fucking does bring me money in. And if that fucking business fucks up, I need this business to come in. This business doesn't come in, what am I do? When I go back to 9 to 5? No, I can't do that shit. So, yeah, the lesson is I cannot use my phone, and I will not use my phone anymore, or the computer, on like searching up some shit up at on whatever the fucking market is over there, and Twitter, some shit like that. Specifically the chart, only the chart. And there was a SMT with this 6 a.m. with a 7 a.m. candle, but you guys know OTE doesn't happen on SMT does not happen on OTEs. Keep that in mind. Very insightful, because usually, guys, I see people looking for SMTs on OTEs and they get stopped out. I'm like, what the fuck? You a dumbass. You gotta look for. There was an OTE, so there can't be SMT, because every pair has their own agendas. And the only time SMT happens is very rare cases. But yeah, thanks for watching. Make sure you guys like, comment, subscribe, share. Join the description down below, and I'll see you guys later. Peace out. This is why I tell you guys so much to worry about the buys more than the execution. Execution is very fucking simple. There's little bit patterns. There was an OTE right over here to the downside. OTE to the downside. This could have been an OTE to the downside, but there's an OTE to the upside. You can see these fucking patterns. It's patterns. So you gotta be very careful. Look at the buys first, because without the buys, there's an OTE to the downside, because first leg, this could be the second leg to the downside, right? There's OTE to the upside. First leg, this could upside the second leg, which he did. But how would you know which one it would have been? But when it should have been this one, because it's a bigger range. It's more like it looks bigger, but it doesn't look like that, right? So you have to prioritize the buys more than anything. Thanks for watching. Make sure you like, comment, subscribe, share, and join the description down below. And I'll see you guys later. Peace out.